So I'm Tage Kene-Okafor, Africa reporter for TechCrunch, and I have wonderful people here from the Web3 and crypto space, and we're going to talk about the power of DeFi and crypto here in Africa. So from my right, we have.
Hi, my name is Maya Caddle. My full-time job is I'm Chief of Staff at Nestcoin. Nestcoin has built a couple of products. One has spun out, which is in the gaming space, and the other one is in DeFi, which is why I'm here chatting. Also built one of the first, excuse the jargon, I'm sure we'll break it down, but I built one of the first non-custodial peer-to-peer on and off ramps for Africa. And then my side project is Emerging Onchain, which is demystifying the African crypto scene using data, insights, and intimate events. So yeah, feel free to follow, subscribe.
Hi, my name is Atwine, and I'm one of the founders of Eversend and also the CEO. And Eversend is a cross-border payments company based out of Africa with a focus on English-speaking Africa. For now, we do B2C and B2B, and we do play in crypto a bit, especially stablecoins. Yeah. Download. That's what she said to me.
Thank you. I'm Isha. I work at Celo Foundation. Celo, for those of you unaware, is a layer 1 blockchain. I had DeFi at Celo, which is why I'm on this panel. I think what makes Celo slightly unique and different is our focus, our mission focus, which is prosperity for all. And we're very focused on refi, which kind of breaks down into, everybody has a different definition, but I like to break it down into climate, financial inclusion, and community. We're one of the only chains that is mobile first. And so that means you can run a light client of our chain on a mobile phone, whether that's a smartphone or even a feature phone. Yeah, that's pretty much it.
Right. Thank you guys for introducing yourselves, and thank you guys also for coming into this session. It seems you guys are crypto faithfuls. I mean, see how scanty this place is, right? And I mean, compared to last year, for instance, where I think here would have been packed with a line outside. So we get started by So based on what I said, right? So from last year up until last year, and probably 2015, from 2015 to last year, we saw VCs backing crypto companies, most of them from 2021, and approximately 90 billion was invested into crypto and Web3 companies. But we've seen a decline in venture funding since the middle of last year, right? So my question to our panelists today is, given what's happened and let's say we startups folding, also like Coinbase and the likes having their valuations cut, right? So what do you think the future holds for the crypto and Web3 space in general, right? And is it like the signs that we've seen? Do you think it's going to last for a while? Yeah, Stone, you can go first.
Yeah, it's definitely not a good time now with all the money getting scarcer and basically leaving the industry. But I don't think it's really like generally a crypto thing. I think it's a lot of VC funding has gone away. I think companies that have serious focus on crypto or making money, like serious business models, will still continue to operate. A lot of companies that were just building on vibes will struggle. But I think VC cash is like that. People. There's usually a lot of hype. Right now it's generative AI. I saw a French company that just raised 100 million after starting a company for days. I don't know how many days. And that's the new thing now, and that's going to go down. But at the end of the day, I think what really matters for any industry, be it DeFi or anything else, is just building a serious business, and then you'll be fine.
Maya, do you want to add to that?
Yeah, so I think we keep talking about, cryptos in the down market, but look around you, the whole world we're in economic crisis, right? Or we're on the verge of economic crisis in most countries. And what we're seeing is that actually the bear and bull markets of the crypto world are very much starting to align with what is happening in traditional finance. And that alignment will continue to, mesh together more and more. So yes, we have our ups and downs, and that's to be expected. But fundamentally, there's still core utility for crypto. And crypto is still, and Web3 is still fundamentally new technology. And we're still all learning, we're still all evolving. Stone is right, especially in the hype period in the bull market, there were a lot of companies that were just based upon vibes. But there is fundamental utility, and a lot of the noise for crypto has traditionally been very Western heavy. My personal view is that a lot of crypto usage in the West is predominantly speculative and ideological. When you go through an economic crisis, those are luxuries that very few people can afford. Whereas in places like the continent of Africa, there is core utility, but it's still early days. We're still learning, we're still leaning into that. And that's why a lot of, let's say, the successful companies, and by successful I mean those who, I'm defining it based upon fundraising alone, have traditionally been exchanges. So in about last year, about 30%, 35% of all funding for African crypto startups went to exchanges. But that doesn't mean that that's where it ends, right? There is a lot more, and we are still building, we're still focusing and drilling down into what utility looks like generally for crypto, but especially in the context of Africa.
I think I'm going to build on that, Maya. Firstly, I totally agree with the both of you. I think bear market is great, and because you actually have like serious builders building right now, some of which I can see in the room, you're actually getting, and because I sit where I sit, which is what I get to see a lot of builders in emerging markets, Africa specifically, and also in the developed world, the US and Europe, I'm actually seeing a lot more funding happening for like real world use cases that are being built in emerging markets, Africa, Latin America, Southeast Asia, as opposed to like funding there is more prevalent and still happening, as opposed to funding going to like a DeFi dApp in the US, because they haven't figured out the utility. But there's like real world use cases, for instance, lending. DeFi lending in Africa is really booming. We're seeing things like DeFi insurance, we're seeing DeFi investments, and I feel like building real world use cases is really the next step. I mean, like that's happening right now in this market. People are sitting down, building, and then funding is going there.
Okay, so I think the next question would be, from where you stopped, right? I mean, funding is going to this peculiar use cases. However, like the big funds that are supposed to invest in the growth rounds of these startups, right, are shifting focus to, let's say, generative AI, for instance. You saw A16Z, I think last month, announced that, right now we are focused on generative AI. Last year, they raised a huge, I think a $4 billion fund for crypto and Web3, right? So if these big institutional investors, right, are switching and shifting focus from Web3 to AI, don't you think that challenges, the notions we have about Web3?
Should I go first? Yes and no. I think they're setting up AI funds, but they already have crypto funds. And the portfolio companies in the crypto funds are still operational. They're still actually doing really well. And so you will now see less pre-seed funds. And I'm actually seeing a lot more like funds that are like going slightly later stage that are starting to pop up, people that are trying to do Series A. And when you think of like AI, actually there's a really cool intersection between AI and crypto too. We see like satellite imagery that is then being used on chain, and insurance, like I mentioned, like there's an insurance product. And so you're using AI and crypto and like really interesting meshing of all of these worlds. And so I'm really glad AI is getting some money, because then like it's kind of funneling back into our world. But I mean, there is a dearth of gunpowder. I mean, everybody's just holding capital wherever. It doesn't matter. It's sector agnostic. And so hopefully we'll see a lot more of that happening in next year.
I see. So correct me if I'm wrong, A16Z, the fund for crypto, is it what, I thought that was what was switched to AI.
No.
Or you're raising something
No,
different?
that's a separate
Separate
fund. They've
fund.
raised
Oh, okay.
separately. It's a separate allocation.
Okay.
Yeah.
That makes more sense now. Do you want to add to that?
No, not much. Just that the A16Z crypto fund is alive and well.
Yeah, they just announced they're opening their A16Z is opening their first
Crypto
sorry.
school?
Yeah.
They're opening their first office outside of the US, right? And that
London.
office is
Yeah.
going to be A16Z crypto in London.
Yeah.
So it's definitely not dead. As Aisha was saying, a lot of money was raised for funds to be able to start investing in crypto projects. They have the capital and now they're going to start dispersing it. And honestly, I always say God bless the SEC, because now whereas before perhaps more of the money would have gone into the US, I think we're going to see a lot more of the crypto allocation go into places like Africa, like LATAM, like Asia, where there is fundamentally A, the utility, but B, there are a lot of crypto companies, Western crypto companies who, they were always exploring Africa, for example. But the SEC's behavior has meant that exploration has been accelerated and there's a lot more intensity involved. Whereas before you'd be like, please, we'd love to speak to you. Now they're knocking on our door. And that's a really interesting place to be. So I guess when you're hearing the narrative of crypto is dead, be really careful. A lot of narratives when it comes to tech generally is still incredibly shaped by Western trends. There is something else happening under the scene and under the hood in Africa, and it is growing. It's just may not be out there in the same way.
I also want to just really quickly add to that. Some of the funds that have raised for Web3 funds have actually now made specific allocations for Africa and Latin America, which wasn't there before. And so actually the down market's been great if you're building in these markets, because like a chunk of the capital has been allocated specifically for these markets.
And have they started deploying? Do you have any idea?
I know, I don't have statistics around whether they've deployed, but I know they're having active conversations, and they're before you couldn't get, like Maya said, before you couldn't get conversations with these funds. Now those funds are coming to you.
Yeah.
They're at least having conversations. They're taking you through DD at least, right? And then when they do deploy, they'll deploy, but
All right.
I mean, we're only halfway through 2023, right? So it's still too early, I think, slightly too early to really have a true sense of what's going to happen, because things change aggressively in crypto and in tech generally. But just to add some figures, so in 2021, £86 million was raised by African crypto startups. By last year, that doubled to 155 million, right? And Q1 was perhaps not as aggressive and as fast as Q1 of last year, but as I said, we're only just finishing Q2, so there's still a lot of time to make up ground. And there, as we're all saying, seriously, not just funds, but even the big Western crypto players are now actively like, what's going on in Africa? How do I do that? What does that mean, right? They're really aggressively targeting Africa. The amount of funds and senior people from major crypto companies that are now popping up in Lagos, popping up in Kenya, that was not a thing last year, is insane. So there is something going on.
Vitalik was there.
Yeah. Vitalik.
So that brings you to regulation, right? And if these funds are looking to invest in African fintech, crypto companies and Web3 companies, right, we don't have favorable regulatory, conditions for these startups. In Nigeria, for instance, right, and Kenya, right? Yeah. So,
I don't completely agree. So things are shifting a bit, right? So if we're to break it down, so Northern Africa as a whole is not friendly to crypto. That is true. But if you look at, let's say, Nigeria, with the new administration, they've passed a Nigerian blockchain policy, and that is quite a big thing for the industry and sector. They also recently passed a taxation policy for crypto, which is quite strange because so there is recognition that you can't tax something that you don't recognize.
So that's the thing, right? For in Nigeria, for instance, trading crypto is still kind of illegal.
Yeah.
But now there's a tax thing for it, so it's just kind of confusing, right?
I think it just means that we're moving in the right direction.
Yeah.
That's what you think?
Yeah.
I mean, what are you taxing then?
Yeah, it's like, okay, you're taxing something that's illegal.
Also Nigeria, in terms of the countries of people, users holding crypto, Nigeria is in top 5.
Yeah.
And so clearly the government is aware that there is so much crypto holding. And so they want to add that to that tax base, right?
Also, so is that a good thing?
Yeah, and also like even places like Kenya, when fintech first came to Kenya, right? It was not regulated, and so they actually like. I admire some of the African countries. They work with the players on the ground and then build regulation around it. Whether that's good regulation or bad regulation, that's irrespective, right? And I don't think we're discussing that. I'm just saying that they're open to like as they evolve in the fintech world, they'll do this. I'm hoping they'll do the same with crypto. And actually, I know like a lot of countries. We're actually involved in some of these conversations even today where we're like engaging with the regulators in different areas and it's not all open. That's the problem, right? And that's fine because it is still an exploration from a regulatory perspective, but conversations are occurring.
Also, one thing to clarify: crypto is not illegal in Nigeria.
I mean,
It's what.
true, like with the banks.
Yes, but it's a separation of traditional finance from crypto. It doesn't mean it's illegal.
Well, it's not illegal, like, you can't trade crypto, but you can use the financial institutions like banks to do it.
Yes, you can't, but it doesn't mean it's illegal. And I think that's an important nuance to draw. B, definitely the recognition. The blockchain policy was a huge thing, and it was also a collaborative thing. It wasn't just a bunch of politicians sitting and saying, this is what we think we should do. They collaborated with local players. And that's just Nigeria. Move to Kenya, right? Kenya is now going on a taxation spree again of crypto exchanges in particular. And they were meant to, I believe they passed a bill which means that there's meant to be a crypto sandbox as well in Kenya. And that was after Vitalik was there. In South Africa, since the beginning of this month, crypto exchanges now have a license that they can apply for, and they're meant to apply for. They have until the end of November, and from that point on, if you're a crypto exchange and you're not licensed, you can't legally operate in South Africa. So these are all movements in the right direction. I don't think we should have this idealistic view of, we should all be free to do whatever we want. Taxation, regulation, these are the right small steps. And as Isha was saying, fintech wasn't regulated, digital lending wasn't regulated. That's why even if we think about in the UK, we had the likes of a Wonga, right? That was just problematic, and to say the least. It wasn't regulated to begin with any new technology. It takes a while for the regulators to catch up, and that's expected.
I also want to kind of highlight here, crypto is really not regulated anywhere in the world well, right? The SEC is going a little bit bonkers right now, and like the only places that are coming up with good regulation or like at least looking at regulations are like places like Abu Dhabi, etc., right? Where they're really focusing on that. And so like when we are talking about crypto in emerging market, we need to be also cognizant that we're comparing against like what?
Yeah.
So like, what's the standard?
And there's also some good news coming out of the UK as well. I think maybe in a few weeks we should have stablecoin regulation passed here in London. So it's probably going to be a great place to build.
So you're saying we're in a good place in crypto and Web3?
Sorry?
Are we saying we're in a good place?
I don't think it's about I don't think things are as binary as good versus bad. I think we're not in as bad of a place as people believe. And especially when we're thinking of crypto in emerging markets. It's not as bad as perhaps it's painted because the narrative still is predominantly focused on what's going on in the West, firstly. Yeah. And secondly, there's a lot that's going on behind the scenes. And unless you're a crypto purist, I always say, if you're a crypto purist, unless you are successfully going to launch and successfully maintain revolutions across many countries, get rid of the financial system as we know, right? We have to learn to engage with what already exists, and that includes regulation. So it's not as bad as I think people make out. It's just we're in a slight period of like, okay, transition, what's next? And that's okay, and that's expected.
Yeah, to recap on that point, so there's bad news, and bad news, kind of travels fast and covers up everything. So the US right now is, the SEC is, fighting Coinbase, Binance, everybody else. There is a reduction in the amount of capital that is being invested in general, all VC-funded businesses or tech businesses. And that has also led to a lot of crypto and tech companies shutting down because maybe it's just difficult, maybe there was no serious business models, but all that bad news is now covering up things that are good things that are happening, like things we just listed. What's happening in South Africa, regulation coming out, the blockchain bill in Nigeria, what's happening here in the UK with the stablecoin bill. So good things are also happening. And companies that are serious about building and have good business models are actually thriving and still going strong. So I think it's just bad news goes on top.
So I think, three of you have talked a lot about having utility and use cases, right? And for Nestcoin, Eversend, and Celo, right? What sort of use cases do you see? I mean, from your company and also outside, right? Standing the test of time in quotes in Africa. And I think, yeah.
Yeah,
Go
ahead.
No.
For us, it's interesting. So about 2 weeks ago, we had this customer in Turkey who is paying about 10,000 farmers in Uganda, and they are using USDT. So we just do that for them. They give us USDT. We make payouts for them in Uganda. That's a nice use case. Save them tons of money in FX and time. They pay weekly now, and we basically make the payouts for them within minutes of receiving the stablecoin. That's one interesting use case. We see a lot of treasury management with companies, especially fintech businesses around Africa that need to move money across borders, including ourselves. That's basically, because we don't have tons of money, that's how we manage our treasury, our float. It can move from one country to another instantly and serve the needs of the other country. We have liquidity providers across all the markets where we operate, so we can very easily turn that crypto money or stablecoins into local currency. And there's a ton of use cases. I'll just let Isha continue. But
This is my favorite topic, by the way, use cases. So I might be here a while. But I think the real opportunity with DeFi and crypto in Africa is the real world use cases, and there's a few I mentioned already. Lending is massive opportunity, especially in Africa, because you get really good APRs in Africa. Over and above you can get anywhere else in the world. It's bad for the end consumer, but at least they're getting access to capital is the way I justify it to myself.
that wouldn't be there.
Yeah. So I think lending is great. I talked a little bit about insurance. There's a whole new narrative around real world use cases where we're talking about bringing assets on chain, things like, for instance, real estate on chain is so exciting. I know land titles generally across the continent, not great. They're pieces of paper which sometimes the municipal authorities say, this is not real anymore. If you can put all of that land on chain, is interesting. You can get lending on top of it, capital on top of it. We're seeing other asset classes. I know, interestingly, a few governments are looking at doing bond issuances on chain to attract capital from the Western world. So there's a bunch of stuff that's happening. And if you ask me what I think I'm bullish about, I don't think it's even been built out so far. So you can do the traditional remittances and the Forex hedges, and there's lots of really interesting stuff in the climate space that's being built. DMRV, things regarding carbon credits and tracking where the money for the carbon credit is going across the value chain, which is so exciting because then you can say, hey, 70% of this value is going to the broker and the project developer, and 2% is going to the community that's actually doing that regeneration work. And so use cases like that are really, really exciting, especially when it comes to Africa, because I think 60% of the biodiversity, total land under biodiversity is on the continent. And so if you can kind of track it and bring all of that data on chain, then actually the continent gets a lot of the revenue, which is then otherwise being dispersed to brokers in the developed world.
I guess also to add to that, I think in the short term, the initial wave of products that are going to be built that I think will really last for the test of time will be in DeFi, in my opinion, right? And it will probably focus on the payment rails because there's still fundamental issues. So, for example, when it comes to intra-African trade, 80% of money flowing from one African country to another, 80% of it leaves Africa, goes through usually an American clearinghouse before re-entering the continent.
Yeah.
That means about $5 billion is lost in fees. And that's ignoring the time issue, because settlement times are ridiculous. And there's so much there. So there's then the trade and accessing and sending money or trading, let's say, with counterparties in other countries. There's a point of accessing foreign exchange. In many African countries, there's significant capital controls in place. So it's really difficult to access stable currencies, so to speak, such as USD, etc. That's where the likes of stablecoins come in. But truly, a lot of things and a lot of OTC desks are using crypto in the back, and we just don't realize. Yeah. So a lot of the power of crypto in Africa, the initial really successful companies you will feel the impact of crypto, but you won't know you're using it. Yeah. And that is where the real utility is to begin with. Yeah. But there will be more, and we've said, Aisha's listed some of the examples, but if you want something tangible in the short term, that is already happening.
Yeah, like banks are settling in USD stables and Euro stables right now. There's protocols that is doing that for them. You just don't know about it.
So why don't we know about it?
Why do you need to know about it?
Yeah.
I mean, it shows that...
Do you know right now who's settling your bank? I'm really asking you.
No, at all.
Then why? Why do you need to know about it in the Web3
space? So, I
space?
mean, the way I see it, right, like, the biggest Web3 crypto companies are the exchanges, right? So you have Coinbase, Binance.
But
right?
are exchanges crypto, though? Are they Web3?
Well,
I'm just going to put it out there.
Okay, I don't know. Anyways, I'm just like
curious.
Are in
the middle, according to me.
It seems a lot is going on in the Web3 space, right? So Stone mentioned USDT, stablecoins, right? And also the smart contracts and all that. But it just feels, okay, no one has this understanding, right? That they are like, in the background, crypto is working a lot in the financial institutions, right? And it just feels, what we're familiar with is the crypto exchanges, right? And all that, right? So to me, it's like, okay, maybe crypto isn't doing us well, but to you guys in the space,
crypto is.
Yeah, crypto is. Maybe you don't need to know. I think what Isha said, like for some of these companies, like some of the companies playing in the cross-border space in Africa or in remittances, for example, for them, for most of them, it's even like a competitive advantage. So they don't want you to know because it helps them with efficiency. But that's just some of the companies. I mean, like even for banks, if that was happening in the back, there's no need to tell you because they can give you your fiat. They can move it for you, but you don't need to know that the rails is basically based off of crypto. But it's happening. I think it takes time. And the news and all this stuff will continue to come out. There's a lot of people, for example, right now in the US looking at stablecoins for settlement of trades on the stock exchange. Yeah. I don't know if you remember the big issue with that. Was it Robinhood and was it GME? What was it? Yeah.
Gemini.
No. One of the stocks that was like,
Oh, Game.
GameStop. Yeah, GameStop is GME. Yeah. And they are seriously engaging government. The SEC, even though it's fighting specifically with stablecoins, they actually also are discussing a stablecoin bill to help with settlement of trades. Because then it's instant, and then it helps you reduce all the lag that they have with settlement. So I think there's serious use cases in the back that people are using and exploring. It's just not out there in public.
I want to just quickly interject. I agree with what you say, but like stable coins are not all equal.
That's true.
Right? You have stable coins that are backed by the currency, like fiat. And then you have all of these like crazy algorithmic, I mean, when I say crazy, because I don't understand it, I'm sure there are really smart people behind this, but like you have all of these algorithmically manipulated stable coins. And so like not all stable coins are equal. And like the SEC is only after the stable coins that are not technically backed by fiat.
I think also just to add to that, let us not, it's very easy to think of crypto and think of exchanges, but they're only relatively a small part of what's actually going on behind the scenes. And to give an example, if you think about when the internet first came around, very few people understood it, right? But in reality now, a lot of the complexity has been abstracted away, right? We don't truly know, we don't know all the protocols that are running behind me being able to achieve, like, go onto Google and search X. We don't need to know, we don't actually care, but it just improves our experience. It makes it easier for me to find information. Same with ChatGPT. Do I know what's truly going on behind and how they... No, I don't need to. And that's okay, and I think that's the way in which crypto, especially in DeFi, will trend towards. I don't need to know that I have to sign a wallet. I don't need to know that I'm doing this. I just need to, I have X to achieve. And yes, in the background, crypto is helping me achieve it faster, more securely, and at a cheaper rate. And that's the end of it, end of the topic, really, for many people.
Yeah. Please, a round of applause for our panelists. Thank you. So we're taking questions from the audience. We need hard questions. Don't ask anything. Soft. So yeah. Do you want to ask? Okay. Oh, sorry. Okay.
It's past.
Oh, go ahead. Be nice.
Go ahead, be nice.
Be nice.
What advice do you have for traditional financial institutions looking to touch crypto?
Looking to?
Looking to touch, play with. Oh god, that all sounds weird. Looking for crypto exposure and for this utility that you speak about.
Can I go first?
Go for it.
All TradFi is already, I want to say every traditional financial institution that I have spoken with, and I have across continents, they are all across continents. They have sandboxes where they're already experimenting with crypto. Some of the largest banks used to run mining nodes very early in the day and have massive stockpiles of crypto. Across the continent of Africa, every traditional financial institution that I've spoken to behind closed doors is experimenting, whether they tell you or not. And that's fine too. I feel like everybody's excited about the technology. They're not getting regulatory approvals, which is also great because they are like dealing with like retail assets. And so they should be careful with retail assets. But they are really excited. And if somebody isn't, then like, I'm happy to engage with whoever wants to learn more, happy to help them pilot stuff, at least provide my limited expertise.
I think also with traditional companies and traditional financial companies, it has to be the approach of, you can't just lean into the hype, right? So it comes down to how does this actually benefit my business model? Right, and too many, especially in the bull market, too many companies were like, crypto, we're going to do crypto, and they didn't actually tangibly know what that means. So it comes down to, okay, what is a business model? What are the areas of improvement? How can crypto improve that, right? So it's the fundamentals of any business and any product that you're building. What are the problems? What are the options for solutions? And crypto may be one of those, it may not be, and that is also okay. And so that's how I would approach it. So if I was in a traditional finance company and they were a bit hesitant on crypto, I'd be like, okay, let's understand how you're working currently. Why are you working this way? Does it actually make sense that you're doing this, or are you just doing it because you've always done it that way? And then look at, okay, lean into crypto. How can crypto help with this? How can it improve? Maybe it is through partnering with crypto companies, right? And you bring in new money, and everyone loves money. No one's going to say no to money. So there's so many different things to do, and it really is heavily contextual based upon your business and just not leaning into the hype, because as soon as you just push the hype, you've lost the battle already. Any other questions?
I actually just want to make one other point. You're going to see, my prediction is, And like in the next 5 to 10 years, some of the traditional rails that traditional banks and financial institutions use will get dissolved because crypto will become so ubiquitous. Like things like ACH, etc. I see them like becoming less.
Even with Fed now?
With everything now. The minute you see it, it's faster.
True.
Yeah, but it's faster, it's transparent, it's easier to
Yeah.
do. Why wouldn't you, right?
I think one of I was having this, I don't know, argument or discussion with somebody on Twitter
It's an
recently,
argument, yeah.
and we were talking about real-time payments in different countries, like Fed now, or what's happening in Nigeria, where you could go to the street and pay for food at 3 a.m. Instantly with your bank account, or what's here with faster payments. All this is well and good, but you can't use faster payments to pay somebody, for example, across borders. And that, I think, for me is you can tell that I'm a cross-border guy and I'm a stablecoin guy. For me, those are the serious, tangible solutions that I see. Fed now cannot pay faster payments.
Except for Fed has its own, like, Fed has a private blockchain that they are
Exactly.
that they're using.
Then we go into
Yeah,
they
so
go
like,
into crypto.
Yeah, the Fed already has a private blockchain, and I'm based out of Boston, so I know the Fed in Boston is developing that chain. So that's what I said. Like you don't like behind closed doors. Everybody's got these sandboxes that they're working in.
Yeah. And I've seen also with payments companies in places where crypto is, like you said, illegal. Like in Nigeria, I know payments companies that they will not be left behind. They do have crypto projects going on. It's just they know that if they switch that thing on, the central bank is going to calm down on them. But they're not like, if they say tomorrow everything is legal and you're going to run on crypto, don't be surprised like how many payments companies will be ready, like, hey, we have this, you can do this. So it's happening, but people are just careful. So I think to Guerra's question, the advice for traditional finance, especially banks, is just build. Nobody's going to stop you from building. You don't have to sell.
All right, I have a question.
Because it's happening.
Yes. Great. My name is Maxwell. I run Waza. Let me stand. So I hear all the promise of crypto, like it's amazing and there's a great future. What do you think the risks are, especially when crypto becomes like in mainstream platform technology for DeFi? Where does that begin? Let's take that tangent. Where does that go to? What are the risks?
Can you repeat the question?
What are the risks
Crypto.
of crypto, essentially, especially when it comes mainstream? I think, to be honest, the real risks in crypto, there's a few. So one, I think, is, so the real power of crypto partly is transparency and being able to know where things are and why. And this is a controversial opinion amongst crypto purists. I think DeFi reigns supreme. But I think the way in which DeFi needs to work for it to truly take advantage of the transparency aspect is you need to do KYC as well. Because it's all good and well saying that, oh, wallet A did this fraudulent behavior, but who is the person behind wallet A? If you can KYC someone, I can say, Maxwell, it was you. Right, you were behaving in a way that you should not have, and this is where you sent the money to, and this is the person who got it and what they did with it then, right? So I think one of the risks at the moment is, to be honest, a lack of KYC. I think the other risks exist, and KYC feeds into this, but a lot of the other risks just exist because it's not properly regulated, right? So there are certain standards that are put in place in traditional finance to protect users, and at the moment, the lack of regulation means that not all companies are enforcing that as they should. And so it's very much, there are some actors who recognize that, we need to make sure our users are safe by doing X, Y, Z, but there are plenty of others who just don't. And that is expected with any new technology.
I'm going to quickly build on what you said. KYC for sure. Another use case that I think I'm really bullish on is DID with KYC. But the other thing also, I think when crypto becomes mainstream,
Sorry, what's the idea with KYC?
identity,
Okay.
digital identity. My thing is when I think of like a typical retail consumer, my problem is that I don't know if you're old enough. There used to be credit card fraud. Some of us who are older in the room would remember that. And you were scared of using your credit card online because like somebody would charge X amount because they have your detail. I think we're also going to see something similar in crypto, where if you don't custody your assets, if you don't self-custody your asset, there might be some rug pulls. And again, goes back to like regulation and protecting retail consumers. And so I think like even custodying is something that we need to think about and talk about. Self-custody is important to everybody in this room. You guys should have your own keys, but if you don't, think about like doing that, which exchange you use and what custody mechanisms they use. Yeah, but I think like in the medium term, custody will be an issue. And like we solved it with like credit cards, we will technically solve it with crypto. Hopefully not. Yeah, hopefully sooner than we did with credit cards, honestly.
All right. Next question. I think we're going to just take two.
Yeah, nice panel. My name is Bernard. I have two questions. So the first question is not so far from the last question. That's regarding the risk. But the context that I want to put it's so the bad sides, right? So when you interact with crypto people, it's always about crypto can do this, crypto will do this, crypto. But they almost rarely, say these are like the disadvantages of crypto. In fact, maybe just go on Twitter and something is happening and maybe someone is complaining because of, a bad experience with crypto, and, maybe the crypto people are like piling on the person, like, no way, you did this, that, like. So I want, you guys on the panel to maybe just, okay, what are some really bad things, like, what do you think are some bad things about crypto that you think is also justified, maybe from a consumer point of view? Like we call it an amazing tech and everything, but what are some really bad things about it? The second question is around human rights. So the whole idea of crypto is, okay, freedom, right? And Maya made a great point about the fact that we have to, it shouldn't just be about freedom. Everyone should just do their own thing, right? It just becomes like the wild, wild west. But when we talk about our freedom as well, it's thinking about people in oppressive regimes, right? We want to do everything with regulators. We want everyone sort of KYC and everything. But then, how do you balance it where you want this KYC, but you have someone in Pakistan, right, who this is one of the best ways for them to transact or get money from somewhere else, right? Privately, like privacy is really important. Or, activists, right? Look at the case of Nigeria, right? The NSAS crisis and all of those things. If there was like full KYC and whatnot, like, then there's really no advantages. So I'm just trying to get your thoughts on these two issues.
So I think what we can do is one person takes one question.
Okay.
And the last question,
Yeah.
the last one, okay, after.
Yeah.
Okay, sure.
Okay, maybe I'll just quickly give you my quick thing. One is that I don't think everything needs crypto or Web3. When a protocol comes to me and when a builder comes to me, literally the first question I ask anybody I meet is, does this really need to be on Web3? And they have to give me a really good answer for it. Second, I want to address your KYC question, right? The way KYC and like DID, what I mentioned earlier, is done on chain is that you as an individual are identified and authorized that you are a human being, which is important too, because in this world there's lots of bots. Two, we've verified your credentials and your KYC'd. However, we will not provide identifying attributes of your credentials to the people using that credential, right? So it abstracts away your personal information, which is not, I don't know anything that does that in the Web2 space, right? So you are a human, you are KYC'd, but I don't need to know your name, your gender, any of these things, which I think is a brilliant use case, in my humble opinion.
Yeah.
I'm sure there'll be loopholes here, but it's possible, and that's what we're trying to build towards.
Yeah. Same. So there's something that's already happening in the crypto space around KYC. I'm not against KYC. Obviously, we do KYC at my company, but what we do with crypto is actually super interesting. Is that there's already platforms that would sniff out bad actors based on addresses. So all the concerns in traditional finance, which would be around, terrorist financing or any of that kind of stuff, sanction lists, PEP, stolen funds, if anything like that happens and touches a wallet, actually, if you try to send money to a wallet that we have at Eversend, and that money or those assets have touched a sanctioned address or stolen from, I don't know, XYZ hack, we will know and we will block it. So it's already happening in the other direction, which is as opposed to saying we need to know everybody and what they've done, it's we will catch bad actors without necessarily having to identify everybody. Does that make sense? If you know, we use chain analysis, and that's basically what they do. So the thing with crypto is that there's actually, it's funny to say it, there's actually more transparency, which is very different from traditional finance, because like Maya said, because everything is on chain, everything can be tracked, and basically you can investigate to the very last cent of anybody who has touched bad assets. Yeah.
Hello?
Yeah.
Do you think there's still a viable or big opportunity around the use case of buying and holding crypto for retail in emerging markets, for retail consumers?
Yeah, because look at how many currencies across emerging markets are performing. Like, there's very few people who actually want to get paid and hold their money in their local currencies because they're devaluing, unfortunately, they're inflationary. And so for many people, stablecoins represent a gateway for them because they can't access traditional fiat, USD, GBP, really it's USD. They can't access it, but stablecoins is a way for them to access it, via crypto or using crypto. So there's definitely a big usage still.
What about beyond stablecoins like Bitcoin, ETH?
But I don't think that's nuanced to emerging markets versus anywhere else. Yeah. I don't think that would be a specific Africa, let's say, focused answer. I think it'd probably apply anywhere, and part of it will be speculation, part of that will be ideological. It really depends on what is built on top of the blockchains, fundamentally.
Maurice, are you asking for investment advice?
I think if there's
None of what I said was investment advice, by the way.
If there's price fluctuation in any asset, commodity, anything, there's going to be speculation. There's going to be people buying and selling. This is never going to stop. Wait a minute, now Bitcoin is going to go up 5%, and then everybody piles in. But that's how we make and lose our money. But I don't think it's going away at all. It's just that, like we were talking about the companies and VC funding is out, there's some bad seasons, and it's always like that. It's up and down. The good thing I think that we see in crypto or in these assets like Bitcoin is the low seems to always be higher. So that's always a good thing. The bottom is always going up to the right, and the top is also always going up to the right. But yeah, we're going to lose a lot of money.
Okay.
On a positive note.
And some people will make a lot of money.
Thank you for the doom and gloom.
No, I was not expecting that. All right.
Hi, everybody. My name is Ismael. I got a question regarding institutional TradeFi, as we've seen recently, like they went all in TradeFi with custody, ETP, it means exchange traded product on stock exchange, spot trading, and what do you foresee as a trend from institutional TradeFi looking further?
Let me take this again. I think there is only one path in my mind, is a path forward. You see like, I think in the last 1 week or 2 weeks, 3 different TradFi institutions have listed BTC spots, right? And so they are engaging. They're also, Fidelity came up with a custody solution. They're engaging. I mean, they're actively participating, not at the speed that I would like, or the speed that the Web3 world would like for them to engage, but they're engaging constantly. And I don't think it's now a question of will they engage. I think the question now has become when and how much.
Yeah, but I was meaning in the value chain what they could propose now that they went to custody, UTP exchange traded product, spot trading, what they could propose.
I think that's all across the value chain. You will have them do they're doing custody, they're doing spots, they're doing futures, but I think it's going to go a little bit more. I know some people that are piloting forward financing and supply chain financing, and so like it is across. I also know there's pilots for interbank settlements that have happened in the past and also happening now. I've heard even intercontinent settlement is happening on chain, or at least piloting on chain. So, but I'd love for you guys to kind of weigh in.
I think I'm not a TradFi person. I've never been a banker, never shall be a banker. Very happy about that, living my best life without being a banker. But there is movement that is happening. So literally Swift, for example, announced their chain, that they were working with Chainlink to partly help with settlements. Swift is also doing a lot of work with CBDCs. So there is stuff that's going on, and it will happen at different points. And it just, as I said, fundamentally, I don't think you can do a one size fits all approach. It just depends upon what the business is doing, what they could be doing better, and where crypto can help and blockchain technology. Like, I think generally the important thing is to remember blockchain technology and crypto are just a means. It's not an end in itself. So just in the same way the internet enables us to do X, right? The internet has touched many parts of the value chain across many different businesses and industries. It just depends on what's right for your business and what's right for a given business at the given time.
All right, I think we're done here. So yeah, another round of applause for us, please. Thank you.